Hey guys, Boris Schlossberg from BKT. Another great week of trading, but this week again I want to focus with you on my idea of levels trading, because I want to show you how when you subdivide the whole playing field into 50-cent increments, you can really see some very interesting price patterns develop that can help you, in this particular case, learn how to fade the flow. And the absolute single most important thing when you want to fade price action is you do not want to be guessing where the top is, where the bottom is. You want to let the market tell you where the exhaustion points come. So here's an example in pound dollar where we clear 1, 2, 3 50-cent levels and then find resistance at 84.50. And the way I always judge this is if it goes up to the level and then retraces by the half cent, it's a good signal that it cannot hold this position, and therefore is probably due for a little bit of a pause. So in this particular case, if you were just simply trading technically, you'd want to fade the 84.50 with the 85 stop, targeting back to the 8400 once you saw the exhaustion point here. Similar type of situation here where you had to move all the way up 4 levels to 8600. Could not hold the 8600 because it retraced to 8650, and here you'd want to be fading 8600. Didn't quite get there. You may want to shade this trade and come in a little bit lower and then try to target 8500 as your potential stop. Those of you who traded with me in the chat room over this week, remember that I did the same kind of a situation. Let me just pull this up, show you correctly. This is euro dollar. So pre-IFO, this is euro dollar move all the way up, like 1, 2, 3, 4, 5, 7, 6 levels of 50-cent increments. Absolutely no stopping us now. Fading anywhere in that level would have been a complete suicide. But gets to 48.50 and cannot hold that level. It drops all the way down to 4800, and at this point pretty much consolidates. I come in pre-European Open right over here before we start the chat room, and I shorted the 4801 because I had technical evidence that we had exhaustion, and I really thought the IFO was going to be weak. And obviously the trade was great because it worked basically for about 100 points. I of course only made 50 because I was trading with a 1-to-1 risk-reward ratio. But this was another good entry, similar type of idea. Finally, last example. Here's dollar yen this week. Another interesting trade. Again, Thursday, pre-bailout enthusiasm. Everybody loves it. Everybody thinks the world is gonna end up happy. Dollar yen rises on all of this positive risk assumption, but gets up to 107, cannot hold it, even in spite of all the good news. Cannot hold the 107 handle, comes all the way down to 106.50. Gives me a technical reason for why I think this could be an exhaustion point. Then Senator Shelby comes out 5 p.m. New York time, says the deal is off the table. I shorted 106.50 with a 107 stop, and of course again another great deal that went all the way down to 150 points. Again, I only made 50 points, but still the key thing here is I let the market tell me where the exhaustion point was. I try to use a fundamental reason to really stand behind my thesis and use the proper risk management techniques to try to make money. That's being on the right side of the trade, and I hope everybody gets a chance to do that next week. Boris Schlossberg for BKT, over and out.